Welcome to Bloomberg ETF IQ Europe. I'm Francine Lacqua. Over the next 30 minutes, we'll be your guide to the region's €1 trillion market in exchange-traded funds. Everything you need to know about the funds and the flows. European exchange-traded funds have stormed into 2020 with record momentum, ending last year with inflows of €107 billion. We'll look at what's hot and what's not. As health authorities around the world grapple with the coronavirus, how should you hedge against a future black swan event? And the future's ESG, with the world's largest money manager now pledging to invest more sustainably, will tell you how to profit from green ETFs. Well, first up, what exactly are exchange-traded funds and why are they growing so quickly here in Europe? Well, let's bring in our Danny Berger. Danny, why have ETFs grown so much in popularity?
Francine, one of the huge drivers here has to be cost. They're just simple indexes that are easy to follow, and often they are much less expensive than their actively managed counterparts. And because the other ones are actively managed, there can be some inconsistencies in exactly what you're getting with exposure. But ETFs, you get that transparency. So a lot of institutions, a lot of banks, a lot of wealth managers like to use them as a buy and hold strategy. The intraday liquidity, this is a really big thing here too. If you want to trade anything strategic, let's say you want to buy a sector, you want to buy a factor, and you want to do it that day or sell it that day, you can trade tactically in that way with ETFs. And finally, again, I said it was the cost and also just the breadth of offerings. We're seeing providers get really creative with what they're giving clients. For example, Francine, you could go out and buy a 3 times inverse levered oil ETF. We're also seeing managers use these in lieu of futures. So every day we get more and more ETFs out there, especially in Europe, that gives investors really a wide breadth of strategies they can use them for.
Danny, why are we so far behind the U.S.?
Yeah, I mean, when you look at Europe, the U.S. has about 4 times as much assets as Europe. Really, the genesis of the ETF market was very different in the U.S. It really started as a mom and pop product, a very retail heavy product. But in Europe, it was the opposite. This was something that institutions bought and now is just slowly making its way to retail. According to Morningstar, we are seeing more penetration. And because of that, the ETF market could reach $2 trillion in 2024. And to get there, we need to see the continuation of what we had over the past few years. That's regulation promoting ETFs in Europe, more stockbrokers offering cheap ways to buy ETFs. And then we have a lot of robo-advisors like Nutmeg, for example, using ETFs. So certainly that retail portion growing, but for now, definitely an institutional product in Europe, Francine.
Danny, thank you so much. Our Danny Berger. Now, let's welcome our guest for the next 30 minutes. He's Peter Thompson. He's head of European ETF at Goldman Sachs Asset Strategy. Peter, great to have you on the program. The launch of the program. When will the European ETF market try to match up with the U.S.? Why is it so much smaller here, and what needs to change?
Yeah, well, I think Danny made some great points on that. And it's a market here that I think is still in its, in its developmental stages, right? And even though we're a quarter of the size of the U.S. market, we're growing at double-digit rates. We're seeing kind of organic growth across countries. And I think when you look at Europe, it's developed differently with the institutions starting it. But then we've just had this natural fragmentation that is the French market, the German market, the UK market, coming at different times and coming in different ways.
Well, do we need and will we get the tax incentive that the U.S. ETF investors have?
I think that's going to be difficult, right? There's an inherent structure in the U.S. Tax code, the in-specie transfer, right, that has enabled that. I think unlikely that turns up here, but still, the principles that Danny mentioned about transparency and ease of use, and I just think at the end of the day, you can't underestimate just convenience. It's easy to use these products.
But if I'm an investor, do I need to choose France over Germany? How confusing is that? And it's actually, the French market for the French investor, largely.
Yeah. I think one thing that has taken a while for investors to understand, that is simpler in the U.S. market where there's one listing, one currency, one regulator, right, is we've had here a bit of fragmentation of liquidity, right? So there's a listing in Paris, there's a listing in Milano, et cetera. That is changing now also. I mean, one of the biggest developments in the last year or so has been RFQ platforms.
Yeah.
Bloomberg has one, TradeWeb has one that aggregate liquidity,
right.
and it's been excellent for clients.
All right, and we'll see how that will change in the coming years. Peter Thompson from Goldman Sachs Asset Management stays with us, but now let's take a look at what's hot in the world of ETFs this week. Which countries and sectors have been attracting the money? Danny Berger has been looking at the numbers. Danny.
Francine, I'm looking at FFLO Go. So this is a view of which countries' bond indexes and stock index have had the most flows over the past year. Year to date, that's what we're looking at here. Now, the top one for this year so far is the UK. The bottom one is Germany. This is a trend we've really seen over the past year continue. So UK, $320 million worth of inflows so far this year. A lot of that is actually gilt products. You'd have to imagine the UK's negotiations with the EU, whether that trade is going to get done. Certainly a big player here. Germany, we continue to see economic weakness, so that's why we see this big red outflow as well. Now, I want to say one of the interesting ones, we've also seen some outflows from Norway as well. You'd have to imagine that some of the coronavirus impact is big here. We saw Norsk Hydro earnings disappoint, so a lot of those stock indexes are going to have raw material producers in them, making those Norway tracking ETFs look unattractive as those risks persist. Francine?
Danny, thanks so much. Danny Berger there with some great charts and functions. Coming up, how do you hedge against the black swan event? And how do you use ETFs to do it? We'll discuss that, plus which ETFs have been attracting the money here in Europe this week. That's coming up next, and this is Bloomberg. This is Bloomberg ETF IQ Europe, everything you need to know about the funds and flows. I'm Francine Lacqua. Now let's talk about hedging your investments against risk. How do you trade a black swan event? Well, taking a look at inflows in Europe so far this month, investors say the answer is to go big on bonds. Despite the wider market turbulence, more than 600 million euros in net new investments has flowed into ETFs. And of that, 450 million euros has gone into fixed income. Well, still with us, Peter Thompson from Goldman Sachs Asset Management. Peter, if you look at the funds and flows, is there anything that kind of, I don't know whether it makes you worried, but you say actually the market is changing in the way it's functioning?
I would say fixed income, Francine, is a big part of that, right? Last year was the first year ever here in Europe that we had more flows into fixed income than equity. It was a very similar dynamic in the U.S. market, and I think one of the highlights of that segment has been the short end, short duration, right? So you're getting a sense that more and more investors are using fixed income ETFs, in cash-like instruments, right, when the market has some stress or when they are, parking money for a little while before they make a decision. But very effective way to do it.
But so does it track, is it actually parallel to the havens that we're seeing across the world? So if there's something like a coronavirus scare, right, and you see a bid on yen and you see a bid on the Swiss franc, gold and treasuries, do you track that with ETFs? Absolutely.
I think gold's a great example. So the gold ETF market has been a real game changer, right, in allowing very simple, easy access to gold, right? And so you've seen a lot of inflows into gold last year also, right?
How many instruments? Okay, gold. How many? Okay, I want to buy a gold ETF. I mean, how many instruments do I have to choose from?
You've got a lot of choice, right? There's probably 10 of them out there. And I think when you look at something that's commoditized like gold, it's all about price and size of the fund, right? And how big you want to be as a percentage of the fund. But you've got a lot of choice.
Okay, give me something else. Is there a Swiss franc ETF, or does it just not make sense because you just go into Swiss franc?
Currency ETFs have been a little slower to take off, but I'd say here in Europe we have multiple listings and multiple currencies. So investors that want European equity exposure in euros, in sterling, in dollars, depending on what their home currency is, can take all those choices.
Danny has a leaderboard, which we'll go to in a second, looking at some of the flows that we saw this week. Did you see anything unusual when there was that freak out from the coronavirus? Yeah,
I think, again, you're seeing in some places the ETF market is becoming the point of price discovery. That's particularly true in the U.S. market, where the first views that investors are expressing are hitting an ETF. Yes.
Okay, that's really interesting. Peter Thompson from Goldman Sachs Asset Management stays with us. Now let's take a look at the ETFs, which are attracting money this week with our European leaderboard. Here's Danny Berger. Danny.
Yeah, Francine, here's a look at those ETFs Peter was talking about. And one of them you'll notice at the top is a UBS EM ETF. Now I want to say when we see UBS on the top of the leaderboard, it's usually these ETFs that they use internally. So this is a lot of UBS wealth management action here. In fact, they cut their call on U.S. stocks and upgraded EM. So we're seeing that effect. Meanwhile, we're seeing a lot of interesting plays. The iShares EU inflation-linked bonds getting over $200 million worth of inflows over the past week. You'll remember Christine Lagarde said that she was optimistic about the inflation picture in Europe. Meanwhile, we have an S&P 500 ETF and an ESG ETF as well. These are getting really big in Europe, even more so than the U.S. We continue to see record inflow into ESG ETFs. Now, here is the loser board. You can see this is the opposite view from what UBS had. You can see 3 EM ETFs being the biggest loser. Perhaps some of the coronavirus concerns making investors withdraw their money from both a stock ETF at the top here with Amundi's offering and 2 different bond ETFs. Now, here is the other side of that UBS trade I mentioned. So again, they upgraded EM and withdrew money from their USA ETF. Francine?
Thank you so much, Danny. Now let's talk about also investing in ESG. When BlackRock, the world's biggest money manager, said issues like climate change are becoming a key factor in companies' long-term prospects, investors sat up and listened. So how can you use ETFs to profit from going green? Well, we're back with Peter Thompson. Peter, first of all, if you go back to what you were said that an ETF could be a price discovery point.
Yes.
When the market turns. Did you see more violent moves? I don't know how you look at it. Do you track like what ETFs do, for example, in gold, and do you compare them to what the actual price of gold to see which one's more violent, or is that useless?
No, I'd say a slightly different angle, Francine. Most of what we look for there is just, daily trading volume.
Right.
Right. Where is the liquidity and how narrow the spread's getting, and just the kind of turnover you're seeing in the market.
Right.
Right. And that's a leading indicator of where people are taking those views.
Right.
Right. And things like gold, short end treasuries, sectors. Right. We see that quite frequently.
Talking about ESG, what have you seen in ESG ETFs?
Yes, I think it is it's a huge growth area, right? And I think for a long time, I think a lot of us have thought, okay, there's a lot of talk on this topic, but is the money moving? Is there action? But I think there's been a paradigm shift, right? That ESG, you're going to have to prove what you're doing, right? And investors are asking for it; they want to know. And there's various ways to do it, and I think the ETF market will be at the forefront of that. Okay. Right? We've seen some bold statements from BlackRock, from Goldman, right? That this is really changing the way people invest.
How do you? What do you look at for for an ETF ESG? Is it like a part renewable and part something else?
Yeah, I think there's a basic way where you just exclude things, right? That people don't like for whatever reason. But I think that's that's pretty rudimentary. It's about the data now.
But so it has to be an active one, right?
Not necessarily, right? So you can put ESG into a passive index, a transparent index. There's a fair amount of that out there. MSCI has done a lot of that with their index families. You can do that, but right now, I think where the active and passive worlds are meeting on this topic is the data. What can you draw from the data? Is the data good enough for us to take views on which factors are influencing ESG and how that relates, very importantly, to performance?
And European investors have real appetite for these kind of ETFs.
Listen, I think now it's still a very small segment, right? You look at ESG as a percentage of the $6 trillion that's out there, it's about 1%. So it's still small. But investors are demanding this, right? They want to know. And and it's shifting. So I think you're going to see more and more issuance there. You've already had some big Scandinavian pension funds taking views publicly on ETFs. So it's coming.
Can you tell where the demand is coming from? So which kind of investors or where these investors live?
I'd say, Scandinavia is one of the, lead points in that, right? Very advanced in their thinking. And I think, that's again, there's diversity here in terms of where is the view on ESG in Sweden versus Italy versus the UK, right? So we've got different paces in terms of how people are adopting this, the principles they're using. but it's moving.
How much do you expect this to grow? So 1% now of all ETFs or
1%,
ESGs?
right? Which is I think it's 60 billion or something like that out of 6 trillion. So, but it's one of the areas that, from a small base has the, has the most rapid growth, and I think you're going to see some bigger bets, right? So usually you see kind of incremental movement. I think you're going to see some bigger bets.
Give me a number, Peter. 5% next year in Europe?
I would be surprised. I'd be very surprised if that number doesn't double.
Okay.
Right, at least.
All right, Peter, thanks so much. Peter Thompson there from Goldman Sachs Asset Management. He stays with us. Now, coming up, from green investing to investing in green, we'll tell you about one of the more surprising things you can take a punt on. That's coming up next. You've guessed it, it's cannabis. This is Bloomberg. Well, good morning, good afternoon, good evening. This is Bloomberg ETF IQ Europe. Everything you need to know about the funds and flows. I'm Francine Lacqua here in London. So the days of ETFs just tracking indices are long gone. There are now ETFs for just about everything. Every week we're going to dig down into some of the exchange-traded funds you might not have heard of. And here's Danny Berger with this week's There's an ETF for that. Danny.
Francine, cannabis ETFs, they finally have crossed the Atlantic. That's after the success of the product in North America. Han ETF and Purpose Investments, they've launched the medical cannabis and wellness ETF. So it's cross-listed in London and Frankfurt. And this new fund, it's linked to a basket of U.S. and Canadian marijuana stocks. Now, about half of those stocks actually touch the plant. In other words, directly invest in companies that grow cannabis. I should say, though, all of the companies it's invested in are medical marijuana stocks. You'll get no recreational marijuana stocks in this, perhaps appealing to those more conservative mind investors. Now, so far this week, it's gained about 5%. That actually is better than the S&P 500, which gained about 4%. But over its launch, it launched January 14th, it's basically up 1.5%. So not stellar performance. But we see with these pot thematic ETFs in North America as well, despite a little bit of disappointment in the performance, they continue to get assets. This one has nearly $7 million worth of AUM. Francine?
Danny, thanks so much. Our Danny Berger there. Now let's get passive aggressive. After years of Brexit uncertainty, demand for UK stocks has been picking up. Investors have added $6 billion to Europe-listed exchange-traded funds tracking UK assets. But they now face a quandary. Should they rely on an active manager or throw their lot in with the passive revolution? Well, Ksenia Gluchko has been looking at the numbers. Still with us, Peter Thompson from Goldman Sachs Asset Management. So, Ksenia, how big of a pickup have we seen in UK ETFs?
So exactly, just like you said, the optimism for UK assets has been picking up since mid-October, since Boris Johnson won the backing of the Parliament for his Brexit deal. And you would think that that money could have gone into mutual funds, but no, we've seen the opposite trend. The money has been clearly going for the ETFs, and we've seen $6 billion of inflows, and Vanguard and BlackRock ETF are some of the biggest, seeing record inflows, while mutual funds have continued to see outflows. And the reason is cost, and also, in general, the battle of passive mutual funds, and passive is winning in that game.
Okay, do we know what kind of ETFs? Is it just normal UK ETFs?
So the most popular products are BlackRock's iShares FTSE 100 ETF, so the biggest benchmark, and also the Vanguard FTSE 250 ETF, right? So the more domestic mid-cap ETFs, those stocks have been doing really well because of bets that the economy will recover once Brexit is over.
Okay, we need to talk about this passive aggressive. Genius name, by the way, from our producers. Passive aggressive. Before I get to that, I mean, cannabis, is it a concern that this could be a fashion? So do people make ETFs, and then if the fashion doesn't pick up, it's just like lost?
Well, I would say the message I'd have on that, Francine, is the adaptability of this wrapper. Right. So it is just, it started on the equity side, fixed income, commodities, it's going into kind of every area of the market. I think the cannabis is an example of that, and I think here in Europe, a signal also that there's a very healthy ecosystem in terms of not just the big benchmarks, right, but some of the, thematic plays, the things that are kind of around the periphery in the satellite space are coming to the ETF market and are working.
I mean, would you guys do a cannabis ETF tracker?
We have no plans for that, right? But, it's out there in the market.
Okay, so let's talk about active versus passive. How long, active is what? Also 1% of the market. Is that true, or
Active
is it a little
ETFs.
bit? Yeah, active
right.
ETFs.
A small segment, but I think there's big news here, right? And there's a lot of talk in America now on this non-transparent active topic,
right,
which the SEC approved, last year. And so, kind of the great and the good of asset management are lined up, to launch non-transparent active ETFs.
Right.
Right. And if that catches on in the U.S. market, I'm sure, we'll see it here, in the not too distant future.
If it catches on, is there a catalyst for something? Is there something that we're seeing that could happen in the UK for this kind of appetite to get bigger?
Well, I've actually been looking into this topic, and the feedback I'm getting from investors so far is that once it launches in the US, usually it takes about 1 or 2 years to come to the European market. So maybe once it launches in the US, then after some time, finally, Europe will see those active and semi-transparent.
Okay, is it much more work doing an active ETF?
It's a bit more work, but there's models out there that do it. I think, the fundamental question is, does the market want this? Yeah. Right? Do investors demand this? Are they going to, they like the ETF wrapper clearly, but do they want active content with a little less transparency in that wrapper? So, they'll vote with their money as they ultimately do.
Okay, I know this is like speculation, but what needs to happen for that appetite to grow? Does it need to be, a complete downturn in the markets? This is kind of the million, trillion, quazillion dollar question.
Yeah, I wouldn't think, Francine, it's driven by market dynamics. I think it's more, once again, is the convenience of the wrapper, right? The ability to trade it all day long like a stock, right? Does that appeal to the U.S. investors when it comes to active products? So that's the big question.
How does Brexit change the UK ETF market?
Well, it does introduce some more certainty, right? But at the same time, there might be more volatility ahead because Boris Johnson faces quite a battle with the EU over the free trade agreement, right? So we'll be watching ETFs on a daily basis to see how exactly investors are playing this game.
All right, well, that was fun. That was our first show. You both coming back?
Absolutely.
Maybe. All right, we have a yes and a maybe. Ksenia Galuchko there. And Peter Thompson, he is head of European ETF at Goldman Sachs Asset Management. I'm Francine Lacqua. I will be back next week on Friday. It's the first of many shows. That is it for Bloomberg ETF IQ Europe. We'll be back every Friday, 9:30 a.m. London time. This is Bloomberg.